lot of information that's out there for all of us that seems overwhelming, right? And so coming back to Take Back Control Tuesday, it gives us and all a place, all the new people, all the experienced people, a place to really ground because at the end of the day, it's all about us creating better money habits, better money mindset, and disrupting some of the old patterns. So, with a show of eye in the chat, who here wants some more money? Who here wants more freedom? Who can imagine William Wallace face painted blue screaming, freedom? Right? And we got some eyes. So we want freedom. That's what we all want. We all have different versions, but we want more freedom. I'm going to let you in on a little known fact. Something that the wealthiest families, visionaries like Walt Disney, trailblazers like Ray Kroc, the Rockefellers, the Rothschilds, the Morgans, the Stanleys have been using a strategy called infinite banking based in whole life for ages to preserve and to build their empires. The strategy is simple, it's legal, and it's something that each and every one of you have access to. It all starts with changing just one thing. It changes one thing, and it just wants you to appreciate yourself, to pay yourself first. Because why? We're giving a big chunk of our money away constantly to others, to the banks, to the government, to Wall Street. And do you want to know how you can recapture and recycle all of that money that's been leaving you? And for most of you, it's leaving your wheel of wealth, if you will. It's leaving your family's circle without even being aware of it, because that's how we've been groomed. So as we dive into the infinite banking process, we're going to show you how you can make money with every car you buy, drive, and own. We're going to show you how you can turn your debts into assets. What an interesting way to think about debt. Wouldn't you be more excited if you knew your debts were actually really valuable and you could take back control of them? And we're going to show you why success leaves clues. Like Steven mentioned, Tony Robbins, that's his quote, success leaves clues. And we're just going to show you, if you model people have done this, and this is all we do, is help people with the money multiplier, mapping out the millionaire mystery, infinite banking strategy. And I thought this was unbelievable. You guys are going to say to me multiple times during this, Jason, this is too good to be true. This can't be true. If this was true, everyone would practice this. That's what I thought when I learned this. And I'm telling you, someone's been practicing and teaching this for 3 years. It changed my family's life. I'm going to give you some real life examples. And I promise you, as long as you keep an open mind, as long as you're willing to learn something new, and take notes, please, write stuff down. As long as you're willing to learn something new, this could change everything. So let's get into it. So you're looking at this screen, you see the one happy guy and everybody else, all the sheeple are like, man, I'm disappointed. Imagine yourself in a room with 100 18-year-olds. I don't know who here has kids. Give me some eyes in the chat if you got kids, young kids, older kids. But imagine those 18-year-olds. Now imagine asking them, who here is going to be successful during their career, during their life? All their hands are going to shoot up. They're going to start screaming, I am. They're going to be so jacked up and excited with what's in front of them. And they're going to be screaming, I'm going to be a millionaire. I'm going to be a billionaire. And they're going to be excited. They're going to be jazzed up. And we're going to have to get them to quiet down. And when we get them to quiet down, we're going to say, you know what? That's incredible. Don't ever lose that energy of what's possible, because the reality in America today is that if we fast forward to retirement age, only 5 out of 100 of those 18-year-olds with so much ambition, so much vigor, so much life in front of them are going to be financially free. That is insanity. Why is that? It's that way because the system that we're groomed by, the system that we're indoctrinated by, the system that we're taught that is just financial literacy flat out is not made for us. But you guys are different. You're part of the 5%. You're part of the ones that want to change and be someone else, be something different, do better, set up a better foundation for not only your family, but for generations to come. This statistic was one of the most shocking statistics I've ever seen. When I looked at it, I said, how can only 5 out of 100 people be financially free in America, the home of the free, the greatest land, the richest land in all the world? How is that possible when there's so many trillions of dollars out there, just waiting for each and every one of us to add more value, to learn more. So as long as you're open to keeping an open mind, I'm going to show you the 5% who's giving up your most valuable resources right now, your time, your energy, and your focus to learn something new. And now this is one of the best quotes I've ever seen. Will Rogers says, and this is a long time ago, Will said this, the problem in America isn't so much what people don't know, it's what people think they know that just ain't so. Again, I'm just reiterating, so much of what you've been taught about money just might not actually be the truth. Keep an open mind. In this webinar, I'm going to challenge you and the way that you think about money. So who am I? Stephen gave me a nice intro, but I'm going to tell a story that I don't share a lot. So a few years ago, standing in the back of a room in a mastermind in New Jersey, and you guys have been in these events where people are like, hey, let's imagine, who do you want to be? How much money do you want to have? Imagine yourself a millionaire, a billionaire, owning whatever it is you want, doing whatever you want. And I started crying. I broke down, and you can feel I broke down because in that moment I said, what am I doing? I'm away from my family. I'm here with this great group of people learning how we can help more people reach their goals. And I don't see a path for myself. And when I started really thinking about, it's a little bit like Luke Skywalker in Return of the Jedi when he goes into the dark cave and faces his fears. And mine were money. What I'd been brought up by, what my dad taught me, show up first, leave last, work hard, be humble. It wasn't going where I wanted to go. Even though I'd built a $25 million recruitment division in 3.5 years and helped the company scale from 30 to 600 million, I found myself working harder and harder and trading time for money and still feeling financially stuck. And so I asked a buddy, I asked him for help. I said, hey man, I need help. I need a financial philosophy. And he handed me R. Nelson Nash's book, which we're going to talk about here in a minute. And I read it cover to cover in one night. Don't be impressed. It's only 91 pages with lots of big pictures and big font. But I read it again the next day and I said, this can't be true. And this is why I'm here in front of you today. Because when I realized the truth and the depth and the power in this, I was like, this is my mission. I have to share this with everyone. And so let's talk about some of the other folks who have talked about this. It's not a new concept. I gave you some older names, the Rockefellers, the Rothschilds, Morgan Stanleys, right? Like, yeah, Jason, but what about modern people? What about people that are the thought leaders today? Well, you guys might know this guy, Robert Kiyosaki, right? Rich Dad, Poor Dad. He talks about infinite banking a lot in most of his books, and he talks about as another way to build and keep more wealth, to have the tax-free benefits. And then you got the big guy I talked about earlier, Tony Robbins, Money Master the Game, right? I think it's section 5.2. He talks about infinite banking and life insurance as a way to keep and build more wealth, to create generational legacy. And then you have R. Nelson, talked about him like they refer to him as Uncle Nelson. He is someone who I am forever grateful for, even talking to his son-in-law to learn more from the Nelson Nash Institute. Amazing, amazing visionary. And then we got some of my partners. We got Chris Naugle, right, who you guys all know, mapping out the Millionaire Mystery, who he co-authored with Brent Kessler. And Chris also wrote the Private Money Guide, because we have to know the banks keep their money moving. So it's not just setting up the system, it's how do you use it, which is what we're going to get into today. So let's look at something that's kind of fun. So have any of you give me some eyes for people who can ride a bicycle and still can ride a bicycle? I don't know how old you guys all are. My favorite thing, the first freedom as a young man, was riding a bicycle. Okay, we got Craig. I know he likes to cycle, but he lives someplace cold, so it's mostly on a trainer. But let's talk about this interesting concept of the backwards bicycle. I want you guys to think about who learns fast. Who learns fast? Think about yourself when you're young. Think about your kids if you have them. Kids learn fast. So I want you guys to YouTube. I'm not going to show you the video today, but YouTube the backwards bicycle. It's fascinating. An engineer and a guy got together. They designed this bicycle that when you get on it, and I look at it and say, I could ride that thing. Do you guys think you could ride this? I say, I could ride that bike, but I know if I got on that bike, I'd fall on my face. I'd wear a helmet because I'm smart enough to do that. But when you turn the bike right, the bike's going to go left and vice versa. And so over an 8-month period, this gentleman who designed this bike taught himself how to ride the backwards bicycle. And it's because of the deep grooves and the habits that are formed in our mind from things we do over and over and over again. So this paradigm shift is what I'm introducing to you. So I don't want you to get alarmed and think, man, I can't do this. Just think, as long as you're committed to making that one change, anyone can do this. Now let's dive into some of the things about why more people aren't successful. I say money has two parts. Money is both math and mindset. Stephen talked about it earlier. So some of the wealth killers, we all know it's taxes, right? Taxes, inflation, volatility in the market. And I would say a financial philosophy, and write this down, please. Someone put this in the chat for me. A financial philosophy I adapted a few years ago was there's more to be had from avoiding the losses than there is from picking the winners. This means that you really want to take back ownership of the situation, because by taking ownership and taking action, your life can change. And then the mindset. We want to make sure that we're not just following the status quo. We're not just trusting other people. We want to, if we just trusted people. The other day, I had some guy tell me, man, you got termites in your attic and you guys need to tent your house and it's going to cost 12 grand. Well, we went and had a second opinion and found that wasn't true at all. There were a couple of swarmers, like 10 of them, and everything's fine. So it's always, I want you to take ownership. Google the stuff I'm telling you, look into it, and make sure that you're finding this information on your own. Let's dive into the mysteries of money. I want you guys to answer in the chat as I go through each of these, okay? We're going to keep these super simple. Everything we're doing is simple with simple. So we got, what is the definition of money? I'm going to offer you that money is simply a means of exchange, nothing more. If you're a good person, it's going to amplify your goodness. Bad person, same thing. It's an amplifier. It's a means of exchange. It has no intrinsic value. We give a money for a phone, phone for money, money for house, house for money, money for car, car for money, money for candy, candy for money, right? Money is just a means of exchange. So what company uses compound interest? I can't see your hands, but I bet you I know what you're thinking. You're thinking banks, Jason. The banks use compound interest. And I would say, not really. They pay interest, very little, but they don't give compound interest. No business runs itself on compound interest alone. Money, like God's law, right? Like the law of motion, right? An object in motion tends to stay in motion. So money is the same way. Money must stay in motion because, as my buddy Joe says, money in motion makes more money. Stale money doesn't do anything for anyone. So imagine, and to prove this, imagine you're going into a teller, you pull out a $100 bill. Steven, if I was prepped, I probably had a $100 bill. You write your name on it, you hand it to somebody or the teller, and you say, hey, keep this for me, will you? They're like, yeah, I got this, Mr. Sipple. And they walk back, they deposit it. Do you think that money sits there? Oh, no, you don't go back in the next week and ask for, $100 and they give you your bill with your name on it. That money moves instantly. That money's gone instantly. And then, are your dollars worth more today or in the future? And if this is complicated, write in the chat. Remember, play along with me. Are they worth more today or in the future? Think about, I'm going to date myself here. Think about when you were young. You took $1 out. How many gallons of gas could you buy? How many candy bars could you buy? I could get a gallon of gas for 95 cents when I started driving. I could go buy a lot of candy bars for $1. Today, you go with $1 to your grocery store, to Publix, you might get like a half of a king size candy bar. They make them like 10 times bigger and 10 times more expensive. So your money is worth more today than it will be in the future. So we want you to use your stronger dollars today and set yourself up for more protection in the future. Taxes, are they going up or down? Now, it might seem like they're going up with all the craziness in the market. It might seem like they're historically high. But if you go look since 1913, when our tax code went into place, taxes are actually historically low right now. So the question is really, do we want to pay taxes on the harvest or on the seed? Pop that in the chat for me. So harvest or seed? It's always going to be the seed. You want to pay taxes now when they're really small. And then when they grow, when your seed grows into a harvest, you don't want to pay taxes on that. You want to take care of it up front. Teresa knows, Snaggy knows. And what do you know about your retirement account? So now, some of you might be retirement experts. I don't know. Me personally, every time I went and saw Schwab, they would say, hey, great job putting your max into your 401k this year. How do you feel about taking on more risk? What does that mean? Okay. How do you feel about retiring 20 years later? And I was looking at him like, man, you crazy. Like, I told you I want to retire at 55. This is back in my 30s. And you're telling me I got to work to 77 now to keep contributing the max every year to maybe retire at the lifestyle I have now? I kept thinking, this doesn't make any sense. And no one told me it was behind door number C. You know whose fault that was? Mine. Because I didn't ask better questions. But if you don't know what's going on in your retirement account, do you want to really wait till you retire for your silent partner to sidle up next to you, the government, and be like, yo, Mr. Snaggy, I need my percentage. I need my 30, 35, 40%. I mean, go look at debtclock.org. If you want to be shocked, we're $34 trillion in debt as a country. In 2 years' time, we'll be over 44 trillion with a T dollars in debt. We want to have control of our retirement accounts. We want to know what our money's doing, guaranteed, and have a guaranteed way to leave that to our family. So that's a few truths about the mysteries of money. Again, keep that open mindset. You guys are doing awesome here. So let's jump into this money multiplier method. Why is it such a big deal? Why has this changed tens of thousands of lives in a few years? Why do you think this is? It's a 3-step method. Again, we're going to keep it simple. We're going to show you in the rest of this presentation the machine. We're going to talk about what is the machine that makes this possible. Then we're going to talk about one of my favorite things, a marathon. But I really think that there should be no marathon unless you swim 2.4 miles and ride 112 miles first, because otherwise you're just out for a jog, right? You want to have long-term vision here. And this is the first thing we teach. So if you come into the calls with myself and other mentors, you're like, hey, I want everything now. I want to get rich now. Well, I got news. We got to pump the brakes and say, it's possible. Let's start the mission, but it is a marathon. I want you to think long-term first. And finally, we're going to talk about something you may or may not. Maybe you want to be a millionaire, a multimillionaire, a billionaire. I even watched a presentation the other day about there's going to be the first one person running a company trillionaire here in the next few years with all the AI stuff coming. So we'll talk about how there is an unlimited amount of resources, and money, again, is just a resource. And we're going to show you how you can reach your big, audacious goals.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
So let's jump into this machine, shall we? What is the machine? Now, this is what some people freak out a little bit. So the machine is nothing more than a dividend-paying, whole life insurance policy from a mutually owned company. And you might be saying, Jason, what the bleep does whole life insurance have to do with what we're talking about, with privatizing banking, with being our own bankers? And the truth is, this is the oldest financial institutions in our country, and they give us the most security. And I really think it should be called personal financial choice, or privatized banking with a side of life insurance. Now, if you asked me 3 years ago if I'd ever have a life insurance license, much less 48 of them, I would have said, no, punch me in the nose. That's stupid. But the reality is that this tool is exactly what you want because it is going to be the guaranteed foundation for everything that you need financially. And if you want to really know, and we're going to go into an exercise, so I'm kind of giving you a punchline right now, but who has the most specially engineered cash rich whole life in the world? The banks, the conventional banks, where we put our money first today has the most. And if you Google this, you'll see bank owned life insurance. You'll get millions of hits. Remember, check all the facts I'm giving you. You'll see that as of last week when I Googled this, banks had $202 billion of specially engineered whole life. That's why there's so many VPs. The VPs don't even know what they're doing. They're just VPs of things so they can have more whole life. It is one of their biggest assets along with their land for banks. Now, here's a fun interactive thing that I talk about on almost every call. So grab your pens and paper, do a little T chart. T chart looks like this, just in case, any of you are kind of shape, I don't know, maybe shape challenged. So a little T, up at top left, we're going to put bank, top right, we're going to put policy. Okay. Now, under both bank and policy, we're going to go through this pretty quickly. We're going to write liquidity. And liquidity means what? Pop it in the chat for me. I just want to make sure you guys are all still here with me. What's liquidity mean? Now, exactly. It means that we have access to the money. It's accessible. It's not locked up in financial prison like it is with our qualified plans, right? With the government plans. Now we have 0.07%. That's pretty exciting. I saw today that my savings account last year actually made me $3.53. I just happened to look at that earlier today. On the right side, under policy, write 3.25%. That's uninterrupted compounding interest. So that's awesome. We got these two. The next line, taxable. That 0.07%, which by the way is the average conventional bank savings. I know you can go out and get 4 or 5%, but just make sure you're reading that can change at any moment. So all of that growth in a conventional bank is taxable. So I got to pay taxes on that $3.23 I mentioned. On the other side, on the policy side, all the growth, all the distribution, all the loans is tax-free. It's tax-free. We're going over the living benefits. On the policy side, on the bank side, unstable. Unstable, what do I mean by that? Think about Silicon Valley Bank back in the spring of 2023. Then think about all the banks that fell after it. We had New York banks not that long ago. Banks are unstable. Banks practice something different where it's fractional reserve banking, where there's not actually money backing up all of the different things that they're doing with the money, which we'll show you later. So they're unstable. Well, on the policy side, stable. All 5 of the A+ rated mutually owned dividend paying whole life companies we partner with have all been profitable for 100 to 160 years consecutively. That's impressive. How many of you can do something day to day consecutively, much less year to year, especially if you're an entrepreneur, business owner? 100+ years, 160 years, 147 years, 137 years consecutively stable, profitable every single year. Under bank side, we have unprotected. Think about if you're a landowner, a business owner, someone gets hurt on your property. A good attorney can come after you for the money that's in your savings account right now, in your money market, and actually access it. That money's unprotected against liens and judgment. Now, on a policy side, it's protected against liens and judgment in some way and fashion in all 50 states, fully protected in the majority of them. And there's something you can even utilize with that if it's one of the states that's not, because that's one of the questions you're probably thinking. And then finally, we get to, there are all the living benefits. So we got liquidity. We got a higher guaranteed interest rate. We got tax-free growth and distribution. We got stability, protection. And finally, we get to the cherry on top. This is why I said it should be called total financial choice with life insurance on the side. And that's on the bank side, there's no death benefit. Whatever you have in that account is there, and that's all you have. On the policy side, you have a tax-free death benefit that's a multiple of whatever your cash value is. So, Jason, you might think, where do the banks keep their money? I gave it away on the last slide. So that I'll work on for another presentation, but the banks keep their money in bank-owned life insurance. How does your money flow? This is a fun one. This one blew my mind. So for everyone out there, this took me a little bit of time, about 19 times to understand this. So we're going to pretend I'm Jason the banker. I believe that there is two disciplines in life, right? Or sorry, two pains in life. I just gave away one. Pain and discipline, pain and regret. So you're someone that practices discipline, and we're going to talk about you buying this new vehicle that you've wanted. Now, don't get hung up on the price. It can be like a Ford Focus, a Ferrari. Just add zeros, take away zeros, whatever you're buying, right? And I'm going to be Jason the banker in this example. And we're going to talk about how money flows. So you're going to come into me and you're going to be like, hey, Jason, good to see you, man. I've been saving my money for a couple of years for this new car. I'm super stoked. I'm getting a good deal on it. I want to take my $25,000 out and return my account to zero. I'm like, hold up. I've got a proposition for you. What if I give you a loan for 60 months for $25,000 at 6%, and I will keep the money in our bank and pay you 4%. I'm a generous banker. Remember I talked about 0.07%? Would you, answer in the chat, please, would you, and at the end of this time, at the end of 5 years, you will have made more money leaving your bank sitting here, or money sitting here in the bank for 4% than you will taking a loan out for 6%. Do you believe that I'm telling you the truth? Efren says yes, he believes I'm telling the truth. Yes, all right. You guys think I'm Jason the banker is an honest dude. And that is the truth, because on the car side, on the loan side, your monthly payments are going to be about $483 a month, right? The future value, so over 5 years, over 60 months, you'll have paid $28,999 at 6%. Now, because the money's been uninterrupted and compounding, the future value is over $30,000. And this is just for anyone who wants to know how to do this on their own, go look up time value money calculators. There's a whole bunch of different resources out there, and you can do this exercise yourself. This is how I had to prove this to myself. But in the scenario, you made $1,536. Next, we're going to talk about how do the banks actually use your money to make money. Remember, we're going to say they're super generous bank. They're giving you 4%, but I'm going to show you why they're giving you 4%, why they're giving you that money, because the way they make money is the way we want to teach you guys how to make money. So you're going to take your deposit and you're going to put your money, your $100,000, and remember, it can be 10,000, 100,000, 200,000, whatever you're depositing, saving, because you have discipline, into a bank. Remember, you're the 5%. What do the banks do first? As soon as they get a deposit, is that a liability or an asset? I'm just going to give you the answer. That's a liability to the bank. The bank, again, has to keep your money in motion. So they're going to lend it out to someone who wants to buy a home, right? And they're going to lend that money at 7%. And now that money comes back to the bank from the seller. And the bank's going to do what? The bank's going to move the money again, because they can't keep it there. So they're going to lend out your same money that's sitting there and giving you 4% at 8% now for someone who wants to buy a new car, right? Just like I try to do as Jason the banker. Now the car dealer deposits the money back in the bank, and the money's going to go out again. This time it's going to go for a home remodel. Maybe your wife, your husband wants a new bathroom, a new studio, a new office. You want to put a pool in, whatever you're looking to change. I know Snaggy's knocking out walls, right? And building his walls. And then the contractor's going to put the money back in the bank. And so far, the bank's in a pretty good position, which we're going to cover here in a second. And now, debt. Remember, we talked about this as one of the biggest wealth killers. debt. People are going to try to consolidate their debt. How many, I looked at my mail today. How many letters do you get to consolidate debt? I literally must have had 20 to 25 things offer me credit cards, debt consolidation, all those things. So now we've got debt consolidation at 12% for the credit cards. That comes back to the bank. So let's go through this. So this is how the banks are making money on our money. They paid us 4%, but look, they've already moved the money 1, 2, 3, 4 times, and they move it more than that. But we're going to go through each of these scenarios. So remember the first time it was 7 minus our 4% gives us 3%. Okay. Next, 8 minus 3 or 8 minus 4 is going to give us 4, right? The next one, let's keep going through this. 9 minus 4 gives us 5. You guys follow me so far? And next, we got 12 minus 4 is 8. And so we're going to add these up. Remember, we're getting 4%. The bank's being super generous. We've made 20%. Is that right? 20%? Does that seem accurate? No, it's not. The banks, right? How many more times is 20 than 4? It's 5 times. So the banks are making, in this scenario, 500% on our money. If you go to BauerFinancial.com, you're going to find out that the banks are making, on average, between 400 and 13% on all the money that we leave there, you and I. So think about it. You go to the bank, you put your money, your $100 bill in there, and they give you what? A sucker? A dum-dum? When you look at the wrapper, just think about that for a moment. You know, why do they still give us candy when they know it's bad for us? So now let's go into our annual pattern of spending. I'm going to go through this. We're going to break down a dollar, and we're going to show you how this is going to bring back, like, would anyone here want a 34% raise? We'll pause here for a second. Anyone want a 34% raise? You go out and you negotiate with your boss or yourself, maybe your own boss. 34% raise. We get some eyes. Anyone want one of those? I do. I'll take a 34% raise. Let's go through and how you can have a 34% raise by just looking and being aware and challenging your way of thinking with your patterns of spending. So the first 20 cents of every dollar we spend typically on automobiles. Now, I've had thousands of calls with you guys. Some of you are spending a little bit more than 20%. You guys are driving some nice vehicles. And next is going to be housing, 30 cents of every dollar. Then after that, 40% goes to everything else, which leaves us with how much, right? Right now we're at 90. That leaves us with 10 cents of every dollar and going to our savings. Now, I tell you, what do you guys think the average savings in America is right now? That's pretty close. Shauna, that is pretty close. Snaggy, you are getting a 34% raise. We talked about it and voted on it earlier. But right now, the average saving in America is about 3 cents. So we're being generous, giving people 10 cents. But now let's look about how much of this is interest. So for every automobile, we're spending about 5 cents of every dollar of the automobile. 5 cents of out of that 20 cents is to interest, is going to somebody else. It's probably 6 or 7 cents in today's economy. And that's going to shift over. What if that shifts over to our savings, to paying ourselves? Remember, we're just changing one thing. Where does our money go first? And homes, if any of you moved into your home in the last 7 years, do not, I repeat, do not go look at your statement. It'll show you that you're paying 70 to 80% of interest to the banks. So out of that 30 cents, 25 of every 30 cents is going to interest. Because why? The banks are smart. They know that we move on average every 5 to 7 years, or we refinance and we start that timetable, that 30-year timetable over again. And next, we have everything else. So of that 40 cents we're spending on everything else, utilities, food, if you got kids, you know, they get, the bigger they get, the more they eat. So we're going to shift 5% of everything else over to us. Now look how much more your savings has gone up. Just think, this is just by shifting one thing and taking back control, ownership of your finances. When you're looking at this, the next we're going to jump into probably Steven and Chris's favorite part. I'm pretty excited about it. It used to be a Ford Fastback Mustang, but I'm going to show you how you can get back all the money for every truck I live down here in Florida, so we drive. You buy, drive, and own. Look at that beautiful truck, huh, Snaggy? That's a nice looking truck. So now we're going to peel back and show you how you can get all of your money back going through the machine together. We're going to lift up the hood. We're going to show you that, hey, how you pay your premiums. Remember, they're premium deposits into your whole life policy. It's your machine. It's your bank. Age doesn't matter. A gentleman earlier asked about age. It doesn't matter. Death benefit doesn't matter either. So we're not going to look at either of those things. We're not going to tell you how much of a premium you have to pay into the policy. We're just going to suggest it has to be enough to solve what you're trying to solve, whether it's $200 a month or $200,000 a month, right? Our premiums are deposits. Age doesn't matter. Death benefit doesn't matter. So let's go in and look at how this works. We're going to, in this example, I'm going to show you how you're planning on buying the car, much like Jason the banker example, in the next 3 years for $25,000. Remember, you add zeros if you're buying a Ferrari, whatever you want to buy, we can design it. It's specially engineered for you, but I just want to give you an example of how this works. And you're going to put in the save up because you're disciplined. You're going to pay yourself $10,000 a year into the system. And then in year 3, we're going to take a loan out. We're going to take a tax-free loan out, and we're going to walk to the dealership, and we're going to buy this new exciting vehicle that you've been so stoked to get for the last 3 years, right? And we're going to go and we're going to start paying ourselves back $500 a month, right? Principal and interest back into our system, because now we're both the purchaser and the owner of the banking system. So we're going to be an honest banker. We're going to pay ourselves back. You figure this out at bankrate.com or somewhere else just to really dial this in. And over this period of time, all right, first 7 years, you're going to have paid back $6,000 a year while you're driving this new vehicle. And at the end of this time, you're going to have put $100,000 into your system, $10,000 a year for 7 years. You following me? And then you're paying yourself back $6,000 for the 5 years of paying yourself the $500 a month in principal and interest. Remember, we're keeping that 5% interest in our lives now. So now at the end of this, you're going to take out the car payment, the cash you took out for the loan, and you're going to say, hey, I should have 75,000, right? Because that's the difference in the two. And if you look, you have a cash value of 67,881. So now you've actually recaptured with your first car 91 cents of every dollar. Let me just ask you a question. Has anyone here ever bought their vehicle and at the end of 5 years, at the end of their 60-month term, had both the vehicle and the cash for 91 cents of every dollar? Unless you're Chris or Steven or myself who's bought your cars using your infinite banking system, the answer is no. This is not something that people have done. Yes, Sean, and with that beautiful red Mercedes, I know you'd be excited to have, Steven, all of the money back at the end of those 5 years. So this is something we'll never teach you how to do this, but now we're gonna go ahead and your car's a little older, it's in your driveway, you've got 91 cents back. But you're like, you know what? I really got my eye on this new car. There's a new e-car, right? EV car. I want something I can plug in. I want something that's a little bit more dynamic with screens and things for my kids. So we're going to go out and we're not going to deposit after year 7 anything else into our system. So no more deposits, but we have enough cash value. We're going to go buy another vehicle and we're going to do the same thing in year 8, and we're going to start paying ourselves back for the next 5 years. So over that period, I'm going to speed up a little here. Over that period, we're going to put in the $30,000 again, and we have the vehicle. And now, at the end of that time, we've actually made $23,000. So we've gone from $91,000 in this year, right? Year 8, and we haven't put anything back into the system. So imagine if we would have put 10 grand in those years, or what the deposit could be for those years. But with this, now in car number 2, not only do we have the $25,000 car, but now we've made $23,000 in change. Now, is that not crazy? Who doesn't want to buy all your cars through infinite banking when you see how this machine works? So now we got 3 rules we got to follow for this, right? Rule 1, rule 2, rule 3. Like Van Wilder said, write this down. First, we have to pay ourselves first, as if our life depends on it, because it does. So pay yourself first. Next, we always want to pay ourselves with interest. Who can do more with our interest? Do you want the banks using your interest to make more money and make their families richer? Or do you want to keep that money in your family, that interest, and use it yourself? And finally, we want to recycle and recapture all the money. And if this works for a car, what else could this work for? Think about all the things you finance in your life. It can work for everything. Now I'm going to go through another example and show you how one of Brent's, Brent Kessler, founder of the Money Multiplier, one of his docs that he worked with was able to take their debts and turn them into assets. Like Albert Einstein said, you have to know the rules of the game. And once you know them, once you guys are seeing this truth, remember the paradigm shift. Once you see the rules of the game or know the rules of the game, you have to play better than everyone else. So let's show you how by shifting just the one thing we've been talking about, this doc who's 45 years old, he's got 9 third-party debts I'm about to show you. He's almost $500,000 in debt. And we're going to show you by changing where the money he's saving goes every year, how he will pay off his debt significantly faster and keep more money in the family. So here's his debts. Right, let's look at them. An average APR right now for our debts in America. By the way, congrats, America. We're over $1.13 trillion in credit card debt with an average of 22.83% is the average I looked up last week. So we have taken on a lot of debt being consumers. What if instead of being consumers, we became creators of our own financial strategy, our own privatized system? This is what it would look like. So this doc's going to put $25,000 a year in a premium deposit because that's what he's been saving. Total debts, like I said, almost $500,000. So in this, if he would have just kept paying his debts as is, it would have taken him 19 years, over $5,777 a month, $70,000 a year to pay this back. So let's go show you how he takes back control of his debt, turns it into an asset, and recycles and recaptures all this money. So in year 1, remember, he's going to put $25,000 into the policy. His cash value after he makes his premium deposit is going to be $14,000 and change. So look, he's going to knock out a couple of the debts. This is how you would do it too for yourself. So think about your debts, play along, think this is your scenario right here. This could be you. Get excited about this. So he's literally turned $448 that he was paying to someone else back to his family. That's principal and interest, right? That he's recapturing 21% and 11% immediately. Let's go to year 2. This does the same thing. This is all we're going to keep doing. Now he's made the payments back to himself. Remember that 448. Plus, he has more cash value that he can take out in year 2. Hasn't repaid his loan at all. We're going to knock out the next few debts, and we're going to recapture more of the money. Now, this doc is recapturing almost $2,000 a month. That's 24 grand a year that he's recapturing that was going out to someone else. Now we go to year 3. Right? His total cash, he makes a deposit and he's already at what we call, you hear us talk about this on the AMA all the time. This is our money tree year. This is the year where every dollar we're putting into our system becomes more than $1 and it grows from that point on forever. It's never worth less one year to the next. It's always appreciating. So now he's got $25,000 deposited. He's got an extra $541 that he can use, plus his payments back to himself. $48,000 knocks out the BMW, knocks out his boat that he probably doesn't even use. And now he's recapturing this money to $3,600 a year. And we're only in year 3. Remember, it's going to take him 19 years to do it the traditional way. And so let's revisit this. In 3 years in the marathon, right? How much should we put in? Go ahead, pop in the chat. How much should we put in? $75,000. We took loans out in year 1, year 2, and year 3 totaling $55,000. How much is left in the policy? Maybe you do math different in Florida than I do, other parts of the country that we do here in Florida. Is it $20,000? No. We still have all $75,000 getting us a guaranteed appreciating interest that's contractual, plus most likely it's earning us dividends. Remember, all these companies have been profitable for 100 plus years consecutively. So let's jump ahead. Let's show you what happens in year 4. He's going to do the same thing, deposit the money. He has more cash value, like I said there would be. His payments back to himself are $44,000. He's just practicing the discipline. He pays down the condo. It's not completely paid off. And we go to year 5. And year 5 is going to do the same thing. Deposit $25,000. Now he's got $27,000 in change. He's paid himself back $44,000. So now he's got $71,000 in cash. He's going to knock out the condo, recapture that $879 a month, and pay down the house. And this is something that going through the process with the money multiplier, we actually give you this information and show you exactly this with a debt blaster, which we'll add in future presentations. But a debt blaster, after you do your paramedical, after you're in underwriting, will show you what's going to be the most efficient way to pay off your debts, whether it's going to be the avalanche method or the snowball. All right, but let's stick with this doctor. So now he's made another deposit of $10,000. He's had to start another policy. So now this doc has cash value $10,000, and he started another policy for $25,000 again, because he has more than he can fit into his existing container. And that's how we help people build a series of policies. And so in this year, payments back to himself, $54,000, $82,000, 6 years. So 3 times faster, this doc has recaptured all of his money, $5,700 a year, $82,000 in cash. Like I said, we're introducing or have introduced a debt blaster, which will do this exact thing for you. And we also, once you have your policy in force, we have a team that'll give you a debt map. And the reason we do this, because would you guys agree that knowledge, all the things I'm telling you today, are powerful, but they're not powerful unless you do one thing with it, unless you take action. You must apply the knowledge for it to be powerful. This is why I partnered with the Money Multiplier as a client. And today I'm here as a mentor, as a money Jedi, right? Like Steven said earlier, I love Star Wars. So we've got the evil empire here with Darth Vader, and we got us, everyone who's here as Yoda or whatever your favorite Jedi is, right? Here is one of my favorite questions of all time. How do you eat an elephant? Can I get it in the chat? Steven, how would you eat an elephant? Why don't you come off mute and tell the people?
I'd get a really sharp knife and I'd start in the belly and I'd dig in from the top.
Okay, well, that's very, very graphic. I was thinking more like maybe we'll have some elephant steaks, maybe an elephant stew, maybe some soup. Maybe we'll make some burgers, salads. We'll do a bunch of different things, but we do it one bite at a time. That's a big animal, right? And the man at the top of the mountain, the people that you admire, the people that you are modeling, they didn't just fall there. Chris isn't as successful as he is today, or Brent, or anyone else that you admire in our ecosystem. They're not successful. They didn't just fall there. They got there one step at a time. So it's the progress that's going to make us all happy. That's what I want for each and every one of you. Remember, progress equals happiness. Give yourself permission to succeed. You just say, hey, I don't know how to do this, ... yet. And whatever you're intending to do, just give yourself permission to succeed. And then, is it possible to owe no man nothing? And the answer, it's a weird question to me, but the answer is yes. If this works for your debts, if this works for expenses, for purchasing cars, why wouldn't it work for your vacations, for your homes or second homes, for your taxes, your tuition? You can use this for everything, for your kids building their business, for weddings, whatever it is that you can dream of. It's only limited by your creativity. And we're not done yet. Remember, if we would have kept paying the same debts back, if we're being the honest banker, check this out. You guys thought that was over? Not yet. For the condo, there was still 251 months left, right? And we're paying this money back into our system. Over that time, if we kept paying it back, that's $500,000 that we've recaptured by just taking control, by taking off our hat as consumer and putting on our banker hat. That's all. That's the only change that happened here. Plus, you add the interest. We're calling 4%, but you're more likely earning over 5% on all this money. That's $750,000. So now that you guys know this, don't you think everyone should do this? And if you're not doing it, you're stealing from, oh, sorry, it's a little harsh, but you're stealing from your children, your grandchildren. I want to imagine, Grandpa Sipple up over the mantle. And one time, my family, my grandchildren and great grandchildren are like, man, that guy's the reason that we're here now celebrating together because he showed us what financial freedom was. And by the way, we haven't talked about your guaranteed cherry on top. Remember, total financial control with a cherry on top. So we haven't talked about the death benefit. We haven't talked about the loans being repaid, even though we will always teach you to be an honest banker. We've not talked about the internal values growing tax-free. And we've not talked about the policies being exempt from liens and judgment. So as our buddy Warren says, if poor people would just do what rich people do, they wouldn't be poor anymore. That's brilliant. And think about this, not to be depressed, but there's only one of two things. This is how Chris started what he was talking about, trust and different things. Only one of two things are going to happen to us. We're either going to live or we're going to die. Now, my buddy is joining Mark Zuckerberg's team most likely in his health initiative to help us live longer. But where are you better at? You're better with this or without this, right? Or better with this or without this, not only for ourselves, but for those we love and the things we care about. We're better with this. So the movement. So thank you for listening today. It's been an exciting first evolution of Take Back Control Tuesday. If you want to schedule your free strategy session, have a conversation with me, then just go to, my link right here. It's already in the chat and we can help you out. So anybody got any questions? We'll take questions now. Snaggy, myself, Shauna. Anyone have any questions I can answer right now before we shut down? And I appreciate you guys staying around. So we got 56 people here. That's amazing.
Awesome, Jason. I don't see any questions coming in. So we posted a link to schedule a call. Did you kind of go over what that looks like?
Yeah, so with the calls, it's simple. You just watch the presentation. So you got the money multiplier method. You just got the introductory session to it. When you schedule a call with us, we're going to have a 30 to 45-minute call to meet you where you're at financially. And whether you're the 5 most common things that we talk about on these calls are, hey, are you recycling and recapturing your debts and expenses and really bringing that money back to your family? Do you have lazy money that you want to park and protect? Are you buying a car like we talked about? Are you building for your children's future, for their schools? Or have you taken care of all the building and keeping your wealth? And are you looking to create more wealth? Or do you need someone to show you how you can build the infrastructure to turn your $1 into 2 for your investments, which is what Chris and this team brilliantly does with Private Money Club, where they're introducing you to bringing lenders and borrowers together. And that's the 3 steps. It's build, keep, and create, but it really starts with you. It starts with your mentor, myself, or one of my teammates meeting you where you're at financially today, being honest with yourself. What are your big dreams? What are your goals? What are your aspirations? And then really going through your assets, your liabilities, and getting a clear picture so we can make that plan that's specially engineered for you. How's that, Stephen? Anything else you can think of that I left off?
Man, love it. It's perfect.
How can you do this with you? Thank you, Joe, for that, or variable life. So we're glad Chris isn't here to hear this question. And Joe, it's a great question. I get it all the time. But with variable life, that kind of gives the name of it, and universal index, universal, variable life. All of those things are tied to the market. So what we teach you is only with whole life, specially engineered whole life. And the reason for that is not because you couldn't use the others for banking. There's too many knobs that are not controlled by you. you are not in control with universal life, index universal life. The company, the life insurance company, is in charge. They have knobs they can turn that you're not in charge of. And so we want to give you back control. So we wouldn't recommend ever using that. You can learn more about that. We'll give you more resources on why that is. I don't want to tell you what to think. I'm just telling you what we do and why we do it. Awesome, guys. Well, hey, again, super blessed. Any other questions? I don't need to shut this down. I have nowhere to be other than with you guys. But the first Take Back Control Tuesday, I like how this goes right into Wealth Wednesday. Thank you, Miss Shauna. You rock as well. Well, thank you all. Be blessed. I'm going to stop the share, and we'll see you next week.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.